Alright, welcome back, guys. This is episode 3, and this is all about wedges, how I entry, and how to identify A plus setups. So, now that you understand the foundation of price action, support, resistance, and overall just how the market moves, it's time to apply all that into one of the most powerful patterns that we trade, which is the wedge. And a wedge basically forms when price action tightens inside of a range, meaning support is rising, resistance is dropping, which is also known as higher lows and lower highs, and the candles begin to coil. So just think of it like pressure building inside of a pipe. So, the tighter that it gets, the more explosive the breakout is going to be. And so this is where our strategy is extremely useful and extremely clear, is because when you combine the price action with the wedge structure, you get clean entries and clean exits. So there's no second guessing and no hesitation, and most importantly, no emotional decision making. So you follow a simple set of rules that work consistently across every wedge, funnel, or flag pattern, and because they're all the same thing. So it's all just, the main concept is pressure building inside of the consolidation range, okay? And just keep in mind that tight price action always leads to a big move. So whether it breaks the upside or the downside, the momentum release is what we trade. And this is how you avoid chop, and you always just catch the cleanest part of the move every single time. So a few clear signs tell you a momentum wedge is forming. So first, you'll see that the price action starts to tighten, again with higher lows, lower highs, and the range will compress, and price will bounce between the support and resistance, right? So as that happens, volume is usually declining, and this is the market basically telling you that they're waiting because the buyers and sellers are slowing down as tension builds inside of the range. And another key sign is when price hovers near a major resistance or support level. So when price is basically waiting around those big important levels, right? And this just basically tells us that momentum is loading and that the market is getting ready to break out. And so when you see these signs and a wedge is forming, to expect a big move, right? So you kind of put all those together. And all you have to do is wait for the break of the wedge, and that is when you take your entry. Going to TradingView here. So this is Microsoft. Well, this is actually a setup I'm watching for tomorrow, but just as an example of the wedge, this is basically it, right? We have higher lows, lower highs. And typically you do want to see the move up and then this sort of price action, but you are still able to trade. This is what you want to see, but this is still the same concept, right? So we have tightening price action, okay? We have declining volume, right? We have a high volume move up, and then declining volume, and then you see as we're breaking out here, you want to see increasing volume right here. So this volume is increasing as we're breaking out of the wedge, right? So again, we're bouncing between support and resistance, and we break through on high volume, and then what do? Right? We go sideways, we go up, and then we go sideways again, right? Because that's, again, how the market moves. So this is the setup. This is the setup I'm watching for tomorrow, and this is, again, the same thing. We have higher lows. This is not necessarily lower highs, but this is obviously a clear resistance zone, right? Because we have multiple touches on this zone, right? Even back here, we have this, right? Touch right here, the zone right here, multiple touches right here. So I'm watching this for tomorrow on my watch list. But yeah, I'm going to play the break of this resistance into this previous resistance above, right? So again, that's what we're looking for. Price action tightening, waiting for that explosive move, right? Just like right there. And another example would be Palantir, which is also what I'm watching for tomorrow. And so again, we have this nice move up, consolidation sideways, lower highs, higher lows, with this resistance right here, right? Because we have multiple touches. And I will play it into this resistance level right up above, right? Which, you know, also happens to line up with this support, this resistance, you know, these few touches, multiple touches back over there. So just right into that zone, right? So again, we take the entry through this resistance. Our stop loss is at the bottom at this support, and our take profit is into this resistance. But I'll go a little bit more into that later. But again, the main point is the wedge, right? Higher lows, lower highs, and compressing tight action, right? It's getting tighter and tighter. So that's what we're looking for, okay? All right, so the surge point. So the surge point is the exact moment that price breaks through the wedge, the funnel, the flag, whatever setup it may be. It's basically the breakout point where we enter the trade. So as soon as price pushes out of the structure and you see volume start to come in, that is our confirmation. So we are trying to basically just jump into the momentum. We're not guessing, we're just reacting to the price. And timing is pretty important because the goal is to catch the breakout as it begins, as it's happening, not when the move is already, you know, halfway done. And if you're late on your entry, just forget about it and just move on to the next trade, because you need to enter as price is breaking that level. And remember, we only trade during the first hour of market open and the last hour, because that's where, you know, the market has the most volumes, the first and last hour. Yeah, during those times is when breakouts are the cleanest and the most reliable. So if you focus on the surge point during those high volume windows, you will consistently catch the strongest moves that the market has to offer. And pull up my chart again. So going back to Palantir, this zone right here, as tomorrow, if we open up, you know, and we start breaking through this level with high volume, this would be our surge point, right? This would be our entry. We would take the entry through this resistance into a move for into this zone right up above, right? So we would enter as soon as we break this level, okay? As soon as we break that level with high volume, that's when we'd enter. And for Microsoft as well, even though it's not, you know, specifically a wedge, we have this clean resistance, right, that we have failed to break above, right? So if we do break above, right, let's say we open up here and then we start pushing through, this is when we enter, right? This is when we enter right here, when we start breaking through again with higher volume. And volume wise, you are able to see it in the candle, right? So if the candle is, you know, let's just pretend my cursor is the candle. If the candle is moving like this, right, very slowly and just it's not really moving, that's low volume, right? But if the candle is moving, you know, very quickly like this, you know, if it's forming something like this, especially, you know, it's forming like that to the upside, then we're having high volume, okay? So it's very important to also look at the candle itself and actually read, you know, what it's telling you and how it's moving. So again, like you want to see it, the candle open, and then we start pushing up with high volume, right? Pushing out very quickly through. So you have to be ready as well. And again, for the volume, I would say you just want it to be above the previous candle, right? So previous candle. Because again, for Microsoft, when we had this move, you see how we had high volume, right? So yeah, that is the surge point. That is our entry, is through the resistance with high volume. Okay, very simple. And these are some other examples, just from my resource tab in my Discord. But again, this is our entry right here, right? This prior resistance, and you see how we break through and we get a huge move and continuation as well, because this was a level that we were struggling to break up of, and as soon as we did with high volume, we just pushed through, right? Same thing right here, multiple rejections on this resistance, and then again we push through on high volume and just for continuation, right? Until we start going sideways again. You know, we get the, what do I say? We get that move up and then we go sideways. And then again, we have, you know, nice move up, consolidation sideways, higher lows, lower highs, and then we chop in this zone right here, right, before breaking above this resistance, 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 and we break through with high volume, and then we get that nice move up. Okay, so that is our entry. That is the surge point. All right, so what order type to use? So I do go over this in the book, but again, just very briefly, the first thing that I look at is the bid and ask spread, and if the spread is tight, I'm fine, completely fine with entering on a limit at the ask. So if the spread is tight, I will enter at the ask, or I would even enter at market, especially on like a 0 DTE, just because of how fast the contracts are already moving. And I would prefer to, you know, just pay a little bit extra premium to get in and catch the move, right? But if the spread is wide, I'll put a limit at the mid price to see if I get filled. And if I don't, I would just cancel my order and just move on, because, you know, forcing fills is how you lose money before the trade even starts, right? And this is why I stick to mega caps, because there's more volume, there's tighter spreads, there's better fills, and yeah. And so overall, I'd rather pay a little bit extra in premium and just, you know, actually catch the move rather than getting some, you know, just instantly being down right away, right? All right, so managing the trade properly. So once you're in a trade, managing it the right way is just as important as the entry, right? So my stop loss always goes below the wedge, and you know, if we start breaking out, but then we reject the zone and we touch, you know, our stop loss area, you know, we will see how price reacts to the zone, and if we end up pushing lower, then, you know, we get stopped out, we take our stop loss, right? Which is completely fine, completely normal, right? Everybody loses trades. You know, I lose trades all the time. So there's nothing wrong, and you have to abide by your stop loss, right? In regards to risk to reward, you know, don't stress too much about perfect risk to reward numbers, because the setups that we take are A+ only, and they have a high win rate, high probability, and they usually give us explosive moves anyways. And you know, when everything lines up in our favor, the risk to reward takes care of itself, because the percentage return is already pretty significant, right? And overall, regarding the setup, the setups that we trade are the same, you know, the same thing every single time. And the only thing that really changes is the market momentum, because sometimes the moves are massive, and sometimes, you know, they're smaller. It really just depends on the market environment, right? Not necessarily the setup. But also, just keep in mind that typically the larger the consolidation or the wedge, usually the bigger the move, right? So yes, it's, you know, the market environment, but it is also how big the consolidation and the wedges are and how clean they are as well. So, and for exiting the position, you always want to sell into strength. Okay, so as you're scaling out of your position, you are selling into resistance or support if you're taking puts, right? But you're selling into that level as there's strength, okay? And you always want to sell a little bit earlier, because that will pretty much guarantee your fills, right? Because the difference between selling into strength and, you know, selling as we're coming back down can be a difference in, you know, 10, 15, 20% on the fills, right? So again, as you're selling into resistance, you want to sell into the strength so you can get a better fill potentially. And for selling into strength, I'm selling at the bid, okay? But when you sell into bid and you sell into strength, you typically get filled at the ask anyways, right? So let me just pull it up, right? So on Palantir here, again, this is our entry, this is our stop loss, and this is our take profit, right? Could probably into this zone. This will be our first level right here because of this resistance, and this will be our second level right here, right up above, okay? So we'd enter here, stop loss here on this support, and then sell into the resistance right up above right here, right? So as the candle is forming, or excuse me, as the candle is pushing up, you'd want to sell it probably around right here, right, into strength as we're pushing into the zone. Because when we get to the zone, you know, we could just keep going, right? We could just break through the zone and then retest, test this level right up above. Or, you know, we hit this level, this resistance, and we could start rejecting and come back down to our entry, you know, and we could hold this, retest the entry, and then, you know, reclaim. Or, you know, we retest this and we break through to our stop, right? So there's a whole bunch of different things that can happen, right? Or we could push through and just instantly reject, right? Which is then we'd have to watch for our stop. We'd have to see how price reacts to this level right down here and see if we hold, or if we start breaking through again with volume, then we'll stop out, right? Oh, I guess, well, here. So right here for pounds here, this is to the downside, by the way. I just inverse my chart with Alt-I. So it looks, we can just pretend this is to the upside, right? So we have this wedge, right? We have this move up, consolidation sideways, and then, you know, with the higher lows, lower highs. Typically, you don't want it to like kind of invalidate it like this, but I'll just use this real quick as an example. So as we break through the wedge, right? As we break the wedge right here, this will be our entry point, and then we also have this gap to fill, right? Which is good because you can use things like this as a confluence, right? You can use them together. So we break through the wedge, you take your entry, volume comes in, and this will be our first take profit area, right? Because we have this gap fill, and as you can see, we would sell into strength around right around this level right here, and then you can see it just continues to run, right? So yeah, that is how to enter and where to, oh, actually here, I guess, sorry, I didn't mention, but your stop loss right here below the wedge, right, where there is this support level right here, because if we did reject, we would want it to hold the zone and hopefully reclaim, right? So yeah, again, that is how to enter, how to, you know, sell into strength, where to put our stop loss and take profit zones, and yeah.